Central Accounting calculates VAT based on both the customer VAT type and the stock item VAT rate. For example, if we create an invoice for a UK standard VAT type customer whose item of goods has a standard VAT rate, then the application will calculate VAT. If we create an invoice for an EU export customer for that same standard rated item of goods, then the application will calculate 0 VAT. We can see how these differences are reported within the system when we complete a VAT return. If, for example, we have 4 invoices, a September invoice with UK standard VAT, an October invoice also with UK standard VAT, and the 2 invoices we just created for the 30th of November, one with UK standard VAT and the other for EU export 0 rated. We'll go to Accounts, New VAT Return. We specify the date range from 1st of September to 30th November. We can see that our September invoice appears here, October here. Then the 2nd of November invoices, one including VAT and the other not including VAT, and flagged as an EU customer. We also have here 2 purchase invoices, one for September and one for October. The September sales and purchase invoices have been paid on or before the end of November. If we now change the basis of the VAT report to a cash basis and generate a report again, we can see that only the September sales and purchase invoices are included. If we change the end date to the end of October, at which point the sales and purchase invoices would not have been paid, then regenerate the report, we can see that on a cash basis there is no VAT liability. If we now go back to our starting point and have a look at our VAT return form, we can see that the figures here come from the totals above and that the VAT liability over the period on a normal accrual basis is £14,466. Sales, purchases and EU sales figures again from the column totals above. Finally, if the user's business runs on a flat rate scheme, we can calculate that. If the flat rate scheme has a VAT rate of 12% and we generate a report on that basis, we can see that even though the column totals haven't changed here, the actual VAT return figures have changed in accordance with a flat rate calculation. And when we process the VAT return by clicking this button, two things will happen. Firstly, any transactions that are included in this VAT return, those itemized in the columns here, will be tagged and will not appear in a future VAT return. Secondly, on the flat rate basis, the proper accounting adjustments will be made to reconcile the VAT account with the flat rate VAT payable. The sale account has been credited with the difference between the VAT calculated on an accrual basis and that on the flat rate basis. The irrecoverable input VAT has been added to the costs in the period, and the VAT account balance is only that which is due under the flat rate scheme. And we see here the opposite entries of the sales and purchase account postings that we have just looked at.